Interactive brokers and Robinhood are two popular trading sites, so you might be wondering why I own one and not the other. So I mentioned before I have a small position in interactive brokers. I'm not crazy about the price, but I think long term it'll be fine, and it's one of those things where you just buy a little and every now and then and just stick it in the coffee can and forget about it. And when you check back in a few years, I think you'll be happy with it. And this isn't a recommendation to buy or sell. This is just me walking through my process and talking about why I picked this one instead of the other one. So on interactive brokers, you are paying 37 times this year's earnings and an estimated 31 times next year's earnings. And with Robinhood, you are paying 73 times this year's earnings and 70 times next year's earnings, estimated. So that's pretty high. And as I said before, your default should always be to invest in the S&P 500 index. And anything that you invest in outside of that should be way better than the index. And the index on average trades for a price earnings ratio for the entire index of about 15 to 16. And right now it's pretty pricey. It's trading at 30.8. And compared to the historical average of the index, interactive brokers is a little high. But compared to the current average, it's not that bad. But Robinhood is very high. If we look at the profit margin and operating margin on Robinhood, 50 and 44%, and compare that to Robinhood, Robinhood has a smaller profit margin, but they have a much higher operating margin, 74%. Looks like a software company almost. So Interactive Brokers has one of those operating models where they make less on the transactions, but they do in such volume that for each customer, it can be very profitable because they have so many customers and grow so rapidly, and they're spreading those development costs and operating costs over much more customers and much more transactions. Return on equity is about the same for both, 22% for Interactive Brokers and 23.5% for Robinhood. So Robinhood does not offer API-based trading, which is very popular with hedge funds. So this is an app which is more popular with everyday mom and pop traders, people who come home from work and want to trade a little bit. And they have tried to grow, and they've done that by acquiring other competitors. They just bought one in Canada. They're trying to expand into prediction markets and things like that. But other than for crypto, they don't have API-based trading. And API-based trading is where you can program something in Python and have it execute for you. So sort of algorithmic trading, and it's very popular with hedge funds. Interactive Brokers does have that. And although you see ads for Robinhood all the time, you don't see ads for Interactive Brokers because Robinhood is geared towards retail customers, and a lot of people trade on their phone. And Interactive Brokers, as I said, API-based trading is very popular with hedge funds and money managers. And they both offer very low margin, but in terms of operability and stuff like that, I prefer Interactive Brokers if I were to bet on one to succeed versus the other, just because I believe API-based trading is where you want to skate to where the puck is going, and I believe API-based trading is going to be that. Especially since with the rise of AI, it becomes cheaper and cheaper to execute bits of code. So it'll be easier and easier to come up with different algorithms for yourself and backtest them and execute them on a platform like Interactive Brokers. And their tech is good enough that other people use white label versions of their software and pay them for it. And that's not the case with Robinhood. So at these prices where you're paying twice as much per dollar of profit for Robinhood than you are for Interactive Brokers, and given some of the tech stack that Interactive Brokers has, I would feel more comfortable betting on Interactive Brokers than Robinhood. So the current PE is a little high, but compared to the market as a whole, not too high. So at these prices, just like if you don't have any better ideas, you can put it in the S&P 500. I think if I don't have a better idea, I can just put a little into interactive brokers, just slowly add a little bit over time. And on days when it dips a lot, I can add a little more and just go on with my life. Anyway, again, not a recommendation to buy or sell either interactive brokers or Robinhood, just me walking through my process. But if you guys own any of these or have any comments on them, disagree, agree, just put them in the comments. If you want to support the channel, there's a link to Robinhood where you can sign up and get an affiliate discount, and I'll get a commission on that. And there's a buy me a coffee link if you want to support the channel but don't feel like you have to. And if you have any other stocks you'd like to see, just leave them in the comments. All right. Have a great day, everyone.